let's say you deposited a check for $100 and for some reason the bank only called it $10 and they
Right.
missed a zero or something, then if you're doing nothing but online banking, that can be a bit of a hassle because you've got to spend time on the phone
Absolutely.
and you don't have a person to confront and talk to. My name's Brian Bellamy, and I'm here with my son, Nathaniel Bellamy, and we are engaging in a new podcast to make sense of money and we're calling it Talking Generational Sense or Generational Sense. And we want to help you out. And Nate has some questions that he's going to bring each episode, and I thought I'd let him introduce himself, and then we'll take it from there.
Yeah, absolutely. We're excited to be starting this channel. We were having a lot of financial money conversations together, just as father and son, and I was learning a lot from it, and I just figured that it'd be pretty exciting and pretty cool if we could share this with a lot of people around me so that they could learn from it too, just through conversations with my friends. There's a lot of stuff that I was learning just from my conversations with my dad that could be shared and that I was sharing with them. And so I wanted to do that online and just, share with more people. So today we're going to be getting into a very basic topic, but something that even through my conversations with friends and my dad that I've learned a lot about. And so that was going to be checking accounts. And so, of course, everybody knows what a checking account generally is, but what exactly should you be looking for to set up the best account for you? Where should you be looking and what things should you be looking at to make sure that you're setting it up in the right place? So, Dad, my first question for you is I would love to kind of hear, around what age should I be looking for a checking account, and why is that?
Okay. Well, Nate, first of all, I want to say that even though it's basic, it is very important. There's a lot
Absolutely.
of missteps in this area, I think. And so one of the things I see is that folks don't start a checking account and then banking becomes difficult. And so getting started young can help you to get established with banks themselves and to build a reputation, build credit, those sorts of things. So that's not necessarily a small thing. The typical age that parents start working with their kids and thinking about starting a checking account is somewhere around those first years of teenage life, around age 13, 14, 15, especially at age 16 when they're looking at getting into a car, driving, doing things on their own. So there are various reasons why to start one, but it's can start fairly early on. Now, by the time you go off to college or go out into the work world, then it becomes nearly mandatory. You have lots of folks getting a checking account then, maybe because they have to in order to get their paycheck, because so many of those are electronically deposited nowadays. I think you had some questions about where to set up. Is that right?
Yeah, no, exactly. So you were getting into it right there. Exactly. As we're going up and as it's mandatory to have these accounts, say I am moving off to college, I may not have the local bank that's in my area. And so then we're going to be looking at potentially even these bigger guys, that we hear about a lot, or even online banks. So I'd love to kind of hear, your 2 cents on why should we pick physical or online? What are the perks, pros and cons there? Yeah. So if you could break that down.
Yeah. So as you grow more experienced with checking and banking, you're probably going to become comfortable with the idea of online accounts. And online accounts can offer advantages in terms especially of the interest rate that you might get on the money that's sitting in the checking account. However, when you're young, you don't necessarily have a lot of money sitting in your checking account, so that interest may not be as important. And so customer service can be a very important thing, and that's going to impact the decision making here is, how comfortable are you with the idea of checking, of being engaged with a bank? And so, frankly, nowadays all banks have transitioned now to where they usually have a fairly significant online presence and will allow you to bank with them through things like electronic deposits and online movement of money through services like Zelle, which has its pros and cons. We can save that for another day.
Sure.
But these banks mostly have hybrid offerings where you can bank online, and if they have physical branches, then you can bank through a physical branch. So I lean towards, for somebody that's just starting to open a checking account, they don't necessarily know all the ins and outs, maybe having that customer service component is important. But as I mentioned, that may mean you don't have access to some other things, such as the higher interest and such as a brokerage account or a good IRA account or something like that, because those types of accounts, you don't want to have those with a bank. You want to have those really, you want to have those with one of the big three in that area, which are Fidelity, Schwab, and Vanguard. And the reason for that is because their money market accounts pay such a higher rate, and they have excellent service as far as cost structure for your accounts, and also they have the ability for you to invest in low-cost investments, which will be very important for the long run. So that kind of gives you a conundrum where you almost need to have your local checking and local banking as well as your online brokerage, which will offer you accounts that resemble checking accounts, but they're called cash management accounts, and they don't always have some of the advantages of your local. Now, Fidelity might be a good one for folks to consider if they're in a larger city, because they do have some local branches, and that would allow you kind of have some of the best of both worlds.
Right. So I heard you mention, especially with Fidelity. So Fidelity is one that I just switched over to from another good one. But
how are you liking that?
I'm enjoying it a lot. And so a lot of the perk that I've seen so far is things like the interest rate, and what I'm actually getting back from the account is much nicer than what I was getting with Charles Schwab. Both great accounts, both as far as ease of use, they are about the same. I do like it's a little bit cleaner with Fidelity, as well as I like the fact that using ATMs, I get that money back if I were to withdraw money from an ATM or something. So there's several perks there. Like I said, I'm enjoying it for my retirement accounts and investment accounts and things. It's pretty easy to use. There's just a couple things to get used to. However, interest is a unique topic for many. And so I kind of wanted to hit on that a little bit. I know you mentioned with these online accounts, it may be drastically different than your traditional banks that you go into for these checking accounts. So I wanted to kind of hear, break down what is interest real quick. And then, what typically are you seeing with the different types of accounts when people are choosing that?
Okay. Before I do that, I don't want to get any Brian Stinks messages. So
Sure.
Schwab, I might mention, also has checking and banking that you can do, and also have the types of brokerage and other accounts that I mentioned.
Yeah, absolutely.
I think just get a little better interest with Fidelity. For domestic banking, Fidelity's nice. Schwab actually has some huge advantages if you're traveling overseas with regard to how they do their costs for getting foreign currency and things like that. So just, I suggest folks research the options. But getting back to your question about interest and what it is. So interest is paid for the use of your money by these institutions. So when you deposit with them, they get to treat those deposits as collateral for being able to make loans to others and things like that. And so they are making money on your money, so to say. And so a lot of times, historically, banks and institutions like banks will pay interest on the accounts in order to attract your business and in order to keep you, help motivate you to keep your money on deposit. Because the more stable that money is on deposit and the more you have, that all contributes to the health of these institutions and their ability to make loans and make money themselves. And so that's something that is generally the amount that they're going to pay is related to the market for loans and what those rates are. So if you're able to go out and get a mortgage, say for 2.5%, 3%, like we were back in 2020 and a few years before that, then they're not going to give you very much interest on those accounts. In fact, at that time, money market accounts were only paying about 0.3%. So there's about a 2.5%, 3% profit margin there, you might say, between what banks and institutions are able to loan at versus what they're going to pay you for the use of your money. And so, when rates are that low, short-term money might find other places to be that we could discuss at some point in the future. But that's what interest is. It's a way of them paying you back on your money. Now, that rate of return is based on annual. So they're going to pay you, say, a couple percent. Let's say it's 2%, and you've got 10. Well, let's start even simpler. It's 2%. You've got $100 in the account. You leave that $100 for an entire year. That's going to be $2 in interest.
Yeah.
$1,000 would be $20 interest. $10,000 would be $200 interest. So you can see,
not a whole ton.
Yeah, as you can see, if you get to a point in your career where you're maintaining a balance in there, kind of some emergency type access to some liquid capital, and you're keeping $10,000-$20,000 in there, that starts to add up, especially if rates are reasonable. Sure. Like right now, you can get 4.5% on a checking account with some of the online banks. More of your local banks, like I think my local bank's only paying 2%. Because they have that higher margin and higher cost structure built in, so they aren't willing to pay as much. And then sometimes It's just greed; they want to maintain higher profits. That's your Bank of America's and places like that. Not to bash them; they provide a very high level of customer service. They have easy access to branches.
I've used them
but they're not going to give you much on their money because they don't need to.
Right.
So yeah.
Gotcha. Yeah, no, interest is something that I know can kind of be foreign to a lot of people, but it is pretty important when looking at, what account to choose. Like that was probably one of the more, the main reasons why I switched over to Fidelity. Once again, nothing bad about where I was with Charles Schwab, but I just kind of wanted right now where I had that money sitting there, I just kind of wanted to be able to earn on it a little bit without getting into the investments too much because I'm doing that as well, but just to have in the checking account, just might as well be earning that interest on top of it if I can.
Yep. So with your Fidelity account, do you have a branch nearby?
I actually do. I have one right across the street, which is cool, but that's not usually the case for a lot of people in a lot of areas.
Yeah.
But I do, yeah.
So that would be great for you if somebody, some managed, say, to get into your account fraudulently and they stole $1,000, or let's say you deposited a check for $100 and for some reason the bank only called it $10 and you missed a zero or something, then if you're doing nothing but online banking, that can be a bit of a hassle because you've got to spend time on the phone and you don't have a person to confront and talk to. And so, that is something just starting out that might be more comfortable for some people would be to have that local branch.
Absolutely.
So there, one of my concerns with banking is what the costs are. Have you ever thought about that?
Yeah, I mean, I just generally the cons of choosing a specific bank. Is that what you mean, or do you mean?
Yeah, I think costs are definitely a con.
Absolutely. So I know for me, for Fidelity, one of the biggest things that I notice every year, especially around Christmas time or something like that, is I have cash from grandparents or from friends or whatever. I'm getting cash as gifts. The problem is I can't easily just go deposit my cash in my bank because it's an online bank. So somehow I have to get that money electronically into my account or just spend it as cash. So that can have pros and cons there. So typically that's a con that I notice with a lot of online banks. That's just kind of something you have to bite unless, you have a way of getting it into your account. But yeah, I know absolutely. That's like one con that I notice a lot. What about for you? So as you're using the online banks, what's something else that you've seen in the past that could be considered a con or?
Yeah, so typical local physical bank is going to close at 4 or 5 o'clock in the day, whereas an online bank you might be able to reach them by phone for later hours. So that's something. Your online banks are pretty much always going to have lower fees because they've got to. Why would anybody deal only with an online bank if especially when they have hundreds to choose from, and then
Yeah.
pay more. And so you're looking at potentially higher fees when you're local versus the lower fees when you're online. You potentially, with a really good online bank and platform, may have more access to the various services
Yeah.
that you can obtain through them 24/7 even for some things, for some reasons. And so that might be an advantage. Potentially, I think the higher fees are. I'm very fee conscious. So if you're a bank and you want to charge me $10, $20 a month just for the privilege of having a checking account, and then on top of
Yeah.
that you're paying me 0.3% interest or even less, then I'm paying for the opportunity to give you my deposit for you to use for the health of your bank, and yet,
Right.
it's especially when you're just starting out, you're learning to budget, you're learning to build your financial habits. You're making probably the lowest wages, generally speaking, that you're ever going to make in your life, because most people there are earning potential increases throughout their life. So you're at a time where those fees and costs mean the most to you when you're just starting out, and so that
Yeah.
being with a bank that's charging you for the privilege of having your account because you don't keep a certain amount on deposit or something like that may not make sense. I've got one with E-Trade through Merrill Lynch, which is owned by Merrill Lynch now, that
Yeah.
I've had for I think since 1994. So I've had this account for somewhere between 25, 30 years. And they just, because they E-Trade merged with Merrill Lynch, they've now, just this past 2 months, they've decided to add a $15 a month fee to one of my accounts that never existed. And so I'm now looking at, and it's not that that's a huge deal. And so I haven't been in a huge rush to move it, because the $15 at this point in my life is not the end of the world. And there's a hassle factor in going and getting that account closed and moving the money. But it is disappointing to me, and it's a cost that I don't want to pay. And why should I when I've got other checking accounts that, and frankly, it's called a max rate checking. It used to pay a pretty decent rate of interest as well. And even now, that same institution, just by moving my money from one account to another, that account only pays like 2% interest, whereas another account with the same institution is paying me 3.5% or 4%. So I don't understand that.
Trick marketing. Right
it's strange, yeah. So I was reading some Reddit forums, and they were talking about how apparently, one of the conspiracy theories was that Merrill Lynch just doesn't like this particular type of account and wants it to go away, and so they're trying to run people off. but I don't know, because I use them for some brokerage services and all, where they have make a pretty good profit on, and so you're running off potentially not just the account but the entire customer. So that may not be
right.
I don't think that's it.
No, I mean, I had that experience with, one account that I was using. So I opened my first business account just to go with my freelance that I was doing during college, and, just to have an LLC behind it for tax purposes and things like that. And so I first opened one with one of the big traditional banks, and so I started it. And the problem was that there was a fee, but it was if you don't spend like $200 a month, they charge you $16. For most businesses, that makes sense because you're going to be spending at least $200 a month. But for me, I was just doing freelance. There weren't very many costs. I already had my camera gear and things like that. So really, there was no reason for me to spend the $200 rather than just pay the $16, because at that point, I'm just spending money to spend money just to save $16. At that point, I'm not saving any money. So
I think you're hitting on something very important there, and that is, read the fine print and understand how that account fits into your life. And, a lot of banks will offer multiple accounts, and some of them may fit you better than others. But don't stick to just that one institution either, unless it's just some super compelling reason why you should. If they don't have an account that really meets your lifestyle and what's going on, then, consider more than one institution.
Yeah, absolutely. I mean, there's plenty of options out there. There's plenty that you'll probably see online of ads on TV and everything, but really just do your research and see what works for you the best. I've found, I've switched and I've found different ones, especially for my business or for me personally, that have just worked better and make more sense during this time. And so, it's really just about seeing what works for you the best and finding those few things that to look out for. So like interest rates and, whether online or traditional is the way for you, it just depends.
And by the way, it doesn't hurt to ask if you are seriously interested in a particular institution. Like I was when I started my business, there's a bank that's just a block away. It was going to be very convenient. I liked the people there. I knew they would provide good service. And so I just straight up asked them and told them, I said, look, I want to bank here, but I plan to be here a very long time. I'm not going to bank here if I'm going to pay a monthly fee or if I'm going to have to even worry about what my minimal balances are and things like that. And so I said, basically I want zero cost banking other than the things like wiring money and what have you. And they agreed to waive those fees. So it can't hurt to ask, especially if you're starting a business. They probably won't do that for a personal account. But they may very well do it if you're a business. They're expecting you to grow, to have more money on deposit over time, and they want your business. They may very well be willing to make some changes to your account on the record. So, I've been with one bank for 30 years now and have never had a bank fee, for the account itself. And so that's been nice. And that was not the actual account. It had a fee, but they waived it. So it can't hurt to ask.
No, absolutely.
And I think in future conversations, we should get into where should you keep all of your money in a checking account? When do you start moving it out? Should you have a savings account and investment accounts? What about taxable investment accounts? I think there's a lot of other topics we can talk about in this area.
Absolutely. And I'm excited to get into them because that's kind of where I'm at now is, splitting that money into the right accounts and the right investments and having the money in the right places, basically, that, you're actually making money with your money, or at least you have the ability to make money with your money. So that is growing on itself, and it's just smarter to have in certain places. So that's definitely what we'll be jumping into on future episodes.
We'll definitely want to do a deep dive on those things. I think for now, I just want to encourage everyone that listens to this to evaluate your current banking setup and make sure that, especially if you're young and you don't have a lot of money on deposit, look around and make sure it's the best situation for you. And also think about your future. I mean, where else will you need money? Will you need an IRA? Will you need a taxable investment account? Will you need somewhere to park cash where it can make some interest, but you can access it quickly if you need to as you start to develop, say, an emergency fund? So think about these things. And does that bank that you're at currently in that setup, does it work for you? And are you using it to make money, or is it something that's costing you your hard-earned money?
Absolutely. So if you don't know what some of those things are and you really want to keep growing and learning and seeing really, what's actually going on in your bank or just, with your money, make sure to stay tuned for future episodes. We're excited to be getting this series started. With me and my dad, we've been talking about this for a long time. And so we're excited to really start pushing and helping people learn about, where their money is and what they're doing with it. So Dad, if you got anything to end off the show, I think this will end our first
All right.
episode.
No, I hope this helps make some generational sense of things, and it helps you to see
Absolutely.
more sense in your checking account.